By far, the most often asked question I get is, what's happening with inflation? Why do we have it? How long is it going to last? So I thought today I would briefly explain exactly what we're seeing here. And I'm going to go back to our Economics 101 graphs that I think most of us who had to take even a high school economics class might remember. So I have the graph up here. The blue line is the supply curve. The green line is your demand curve. There's the quantity across the bottom, and then price. And so in a normal functioning market, what it's going to try to do is find an equilibrium price. And so that is typically right across here where the supply and demand curves meet. And what they then talk about is anything up here. So if you have prices somewhere in this range, you have what's called a consumer surplus. In other words, they're able to get more of the product because it's at a lower price. And so you have this surplus. Now, if you go back and think about what's happened in our economy, first of all, we saw income just spike. We saw 3 stimulus checks, personal income. You can see the impact of those stimulus checks on personal income. And so that led to people either leaving their jobs, changing careers. For whatever it is, the labor market shifted because of those stimulus checks. Now, at the same time, if you look at consumer spending, we saw huge spikes. And in fact, the run and increase that we've seen in consumer spending has yet to let up. And so what we had was the economy was shut down. Everybody was flush with cash, so they spent it. And instead of spending it on services, remember our economy is 70% services going into the pandemic. Services were shut down for the most part, so they spent it on stuff. So you had too much money chasing too few goods. And then even as the economy opened up, you had now a shift in the labor market and you didn't have enough workers to help get everything functioning again. And what that's led to is really a fixed price because supply has been limited. So your supply curve here has been sort of fixed. We can't get more. And because we can't get more, now we're looking up here at a much higher price, which has essentially wiped out the consumer surplus that we had. And then that's the pinch we're all feeling because of inflation. We used to have excess money and now we don't because the supply has been fixed due to labor shortages, due to way too much demand, and just too much cash chasing too few goods and services. So that is the issue. And the one thing that I think is really a problem is a lot of people think that inflation is going to abate and we're going to go back. This supply line is going to be this not going to be fixed and we're going to go back to this. But the issue is, and we've already seen this during the pandemic, is buying patterns have already shifted. Some of the things that we thought we needed, we no longer need. And right now, the experience you get when you go out to eat or you go out and do different things is just not the same as it was in 2019, in my opinion. And if you look at a lot of consumer surveys, they feel the same way. So now we're looking at the possibility that our demand line might suddenly be somewhere else. It might be something like this, which means this shift here in demand means even when we have a normally functioning economy, we're going to see a lower level of output. Now, what that means for stocks is we're going to have a lower level of economic growth. The structural level of growth and demand may have shifted lower. Now, I'm not saying it has, but I don't hear anybody else talking about that. If inflation remains high for too long and our buying patterns shift, we're going to have a different economy coming out of this pandemic-led recession into the next expansion, and it's going to look different. And I caution the word different because I keep hearing people say, well, it's different this time. The Federal Reserve will help bail us out. Congress will help bail us out, just because they did during COVID. And what I always remind people is, it is never different this time. We've seen time after time where stocks get way ahead of the economy and everybody believes, hey, it's different this time, only to have the market correct back down to where it should have been. And I don't know where that equilibrium will be, where it ends up falling, but what I do know is we're going into a situation where inflation is going to be a drag on growth. The Federal Reserve has said they're going to be raising interest rates. That's going to be a drag on growth. And just having prices too high is going to be a drag on growth, let alone the fact that going into this year, we're likely not to get any stimulus from Congress. So everybody's going to feel like they have less money, which is bad for the economy. And I don't believe the stock market has adjusted to that. Maybe they have, maybe they haven't. I keep hearing people already with the market being down, hey, buy the dip, buy the dip. And what I always remind people is buying the dip works until it doesn't. Buying the dip works in a bull market. It doesn't work in a bear market. And unfortunately, nobody has an indicator that says, okay, on March 30th, that was the exact date of the start of the bear market, therefore stop buying the dip. You don't know that it's a bear market until 1 or 2 or 3 dip buys have failed. And that's the issue. The other issue we have is a lot of you might be seeing your bond investments, your buy and hold bond investments especially, are not helping buffer the downside. Normally, when you have a market drop, the bond market rallies and that sort of buffers your things. But bonds are losing in some cases more than stocks in different parts of the bond market. And that's something most of you are probably not used to. At SEM, we've been ready for this. We have a plan. We've already implemented some of that plan. And we're ready to go regardless of what happens. This video is already way longer than I wanted it to be. So if you want to find the details, I wrote a blog earlier this week. Click on it in the comments below and stay tuned for future updates.